All right, I want to welcome everyone to our live Saturday morning presentation. We're going to be talking about tax advantages of home-based business. We are recording today's presentation, a couple things. One, the recording typically goes up on our YouTube channel for people who are coming across this recording or people who are going to be watching this recording in Tuesday's newsletter. If you go to YouTube and you type into the search bar on YouTube, Our Synergy Family, and then hit the enter, you'll come to our platform on YouTube, and we take and record all of these Saturday presentations, and then we host them up onto our YouTube channel. So you can always go back and find a Saturday presentation, scroll down through that. You can click on videos. It'll give you a complete list of all the videos that we have on the platform, and you can go through and be able to find things that we've done on a Saturday that might help you build your synergy business. Today, we want to talk about the tax advantages of a home-based business. I think we've done this topic one time, maybe in the last 8 years. It's not a topic that we typically do, but it's an important topic, and it's because it's the beginning of a new year. We're into 2020. It's a new year, a new decade. It's important that you put into place things now that you can take full advantage in 2020 from a tax standpoint. So with that said, let's first start off. I've got a couple things that I want to say before we get into specific details. And the first thing I need to say is I'm not a tax expert. So the ideas that I'm going to share with you today are designed to give you information to discuss with your accountant. It's you and your accountant working together to develop your business strategy, because the goal is to maximize your legal deductions to offset your income from Synergy Worldwide in your Synergy business. Um, you know, I, I've been employed and I've employed people, which means that I've worked for other people, and then I've had people work for me because I had my own corporation, my own business. And when I had my own business, my own corporation, the goal is to make as much money as you possibly can, but at the same time to also be able to offset as much of that money as possible so that you can pay the least amount of taxes. I mean, let's just face it, that is the goal of any kind of business or corporation. You want to maximize income, and you want to legitimately be able to deduct as many expenses as possible so you can minimize the amount of taxes that you pay on the income that you generate. You want to do the same thing in your synergy business. So sit down with your accountant and begin to develop your strategy. Now, in that process, I want to give you some ideas. So the second thing that I'm going to do is these ideas I'm going to share with you today, they apply to the United States. On today's presentation, from listening to the people who are on today's call, I know that there's people in Barbados. I know that there's people up in Canada. Typically, we have people from the United Kingdom. I don't know what your tax laws are in your countries, so what I share with you today, I don't know if they will work or not work, or apply or not apply to your country. The third thing is you need to make sure that you separate your synergy business from your personal accounts. No matter where you live, no matter what country you live in, it's always best practice to make sure that your business is completely separated from your personal accounts. And if you haven't done so, then you need to do the following. First off, you've got to set up a business checking account. You can have a business savings account if you want to, but it's really key to have a business checking account. And note, you don't, at least here in the United States, you don't have to tell the bank that it's a business-related checking account that you're setting up. If you do, then you might be required to have some additional paperwork. And you can go online to Capital One. It's a great company. I have an account with them. It's not my main checking account that I use. I use PNC because they're a local branch here. But I also have an account with Capital One. It's a great online banking source. You can easily set up a checking account. You can easily set up a savings account. You can easily have the checking and savings account completely interfaced with each other so you can move funds back and forth between the two. And if you have a savings account, especially with Capital One, which was something that I do, I have my Capital One savings account tied to my PNC checking account so that I can move extra income in my checking account into my Capital One savings account and earn a higher interest rate off of Capital One that I could at my local bank. Another thing that you need to do is that once you've established your checking account, you want to make sure that you're set up with direct deposit with Synergy Worldwide. That way, when you earn elite rebates, which are paid out on a weekly basis, or if you earn fast start bonuses, which are paid out on a weekly basis, or when we come to the end of the month and the following month when commissions are ready to be deposited, that, you know, commissions would represent basic commissions, mega matches, and leadership bonuses, they can be directly deposited into your checking account. You don't have to wait for a check to show up in the mail. Or I think for like Barbados, you need to set up your hyper wallet with Synergy Worldwide so that on a monthly basis, Synergy takes all your commissions and puts and loads them into your hyper wallet. So again, depending upon where you're located, you might be using hyper wallet. Set it up with Synergy Worldwide so all of your commissions are directly deposited to your hyper wallet. Or here in the United States, take the time. It doesn't require a lot, but set up a direct deposit with Synergy Worldwide so that any commissions that they pay you are directly put into your checking account. You also want to set up a business charge card. Again, you don't need to tell the financial institution that it's for business, but set up a separate charge card so that you can run all your business expenses through that charge card. My recommendation is make sure that the charge card that you use has some type of a rewards program attached to it. It's key because when you then run your business through the business charge card, you can earn yourself reward points that you can then redeem. Like, you know, I use that for I have two reward cards. I have a Chase Rewards card that I run my business through, and I have a Aviator MasterCard, which is through American Airlines. And so I have, like in my American Airlines, because I run my Synergy business as a what I call a type of brick and mortar business, I have inventory that I buy that I directly sell to customers. So I move and go through a lot of inventory with Synergy Worldwide. So I have over 200,000 reward points with my American Airlines. Well, if I have to fly someplace, like we're going to be talking a little bit later about this new promotion that Synergy has as a legal way of deducting your airfare because they don't cover airfare in the new promotion. Well, if I had to pay for airfare, then I would have it as a business deduction. But if I don't have to pay for my airfare, if I can get my airfare for free through my reward points, then I'm going to use my reward points. It just becomes one less expense that I have. You know, my wife has been having to travel to Rockford because her mom is extremely sick. So she's been managing her care. Well, you know, she's been putting a lot of gas into the car because she travels 2, sometimes 3 times a week up to Rockford. Now, I use my reward points from my Chase card for a gas card with BP. And so I get a $100 gas card out of my reward points and I give the gas card to my wife and then she uses it for gas. So whatever you do, make sure that your charge card is for your business and that it's set up for some type of rewards point program so that you can leverage those points for perks that you can take advantage of. Now, fourth, you're going to operate your Synergy business either as a sole proprietor or as some type of corporation. I'm not here to get into the types of corporations that are available to you, but each of them have different tax advantages. So when you sit down with your accountant to set up your program, you know, talk about the different aspects. When I first joined Synergy Worldwide, it was from a tax standpoint, it was more beneficial to be a sole proprietor. But as my Synergy business grew and the amount of income that I'm generating from my Synergy business increased, it became important for me to set up myself as a corporation. Because when I did that, it gave me greater protection and additional tax advantages that I did not have as a sole proprietor. So again, when you sit down with your accountant, talk over sole proprietorship versus corporation and the types of corporations that are available to you so that you can pick the strategy that's going to work best for you. Because at the end of the year, you're going to get a 1099 from Synergy Worldwide. We are not employees. We're contractors with Synergy Worldwide, so you get a 1099, and that 1099 is tied to your Social Security number or your federal tax ID number. So here in the United States, if you make over $500 in commissions from Synergy Worldwide, it's reported to the IRS, and you're going to need to declare that on your tax return. And then fifth, set up a simple recording system to track your income versus your expenses. Make it simple. I have a very simple way that I do things so that when I give the information to my accountant doesn't have to do a lot of work. All my accountant has to do is plug in the figures. So it's basically, you can do this on a monthly, quarterly, every 6 months, annually. I do it every 6 months and provide it to my accountant. And it's basically income versus expenses. Income, it's what you get paid from Synergy Worldwide. And if you do any kind of customer purchases where your customers purchase directly from you, like what I do a blend where I have Synergy do product fulfillment for me, and then I also sell directly to my customers. Well, if I sell directly to my customers and I use PayPal to collect what they're paying me, then I need to make sure that I report those customer purchases as income. But if you have Synergy Worldwide do all your product fulfillment, then basically the only income that you've got would be what Synergy Worldwide pays you with regards to commissions. So it's easy to keep track. And then expenses, because I do sell to customers, I maintain inventory. If you don't sell to customers, if you have Synergy Worldwide do all your product fulfillment, then you don't need to track any type of inventory. And then a sixth thing is, the goal is to reduce your taxes. All right. I mean, I said it at the beginning of this presentation. The purpose of a business is to give you business advantages. And the purpose of a business is to make as much money as possible legally and to deduct as many expenses legally so that you can reduce the amount of taxes that you have to pay to the federal government. But everything needs to be done legally. So the nice thing about having a home-based business is that you can take some expenses that you were incurring before you got a home-based business, and you can now take those expenses and they become legitimate deductions. So I'll give you a good example. Monthly auto ship. As a customer, I could be getting my Synergy products on a monthly auto ship. And as a customer, that would be an expense that I incur. And that expense is not something that I can write off. But once I become a Synergy distributor, I can now write off my monthly auto ship as an expense of doing business with Synergy Worldwide, as my commissions are tied to the CV on my tracking center one. So now the Jumbo Jar Plus One that I get every month from Synergy Worldwide, if I was a customer, I would not be able to write that off. But as a distributor, I can write off the expense of that Jumbo Jar Plus One that I get from Synergy Worldwide every month as a legitimate business expense. Now, I could try and game the system and do a monthly auto ship for all the products that my family would use, but I would be getting most likely a red flag if I did that, where I might incur some IRS audit if all of a sudden they saw that I had a monthly expense of, let's say, $500, $600 to Synergy Worldwide times 12, $6,000 to $72,000 expense for products monthly. So again, make sure that you set up your monthly auto ship for the products that you personally need on a monthly basis. and meets the qualifications necessary to earn all commissions, and then use that as a legitimate business write-off. And then anything that you need outside of that, just order that stuff directly from Synergy Worldwide. The volume goes onto your tracking center one. And again, if you're set up for 150 CV of volume or more on your monthly auto ship, then you're fully qualified, so that any additional orders that you make during the month, that CV volume of those orders go on your tracking center one, and you immediately get a 25% elite rebate, which then begins to fuel your income stream from Synergy Worldwide. Now, with that said, I'll make this PDF available on Tuesday when the recording goes out, when our newsletter goes out to everyone. You'll have a link to this PDF, and in this PDF, I give you live links to documents that I found online that help you begin to understand some legitimate deductions that you can take. So this is one that I found online that had a lot of great deductions, health insurance premiums. Again, when I was a sole proprietor, I couldn't take advantage of this. Once I became a corporation, I could take advantage of this to a greater extent than what I could as a sole proprietor, so that anything that I'm paying from a health insurance premium, I use it as an employee benefit, because I'm a corporation and the corporation employs me. And so I'm able to write that stuff off at a higher level than what I could before. Cost is the same, but now, because of the way that my business is structured, my health insurance premiums have become a better write-off for me than what they were before. Employee education and training. Again, that's a legitimate write-off if you're using it to help you build your business by learning skills that will help you improve your Synergy business. So one great place is online training courses. Udemy is a great place for you to learn business skills. They're cost effective. Maybe you want to learn how to better use Facebook to market your Synergy business, or you want to learn how to use YouTube to market your Synergy business. So there's a lot of things that you can find online from a coursework standpoint that will help you acquire skills that will improve your marketing of your Synergy business. Well, you can write those things off now, because they're legitimate business expenses to help you grow your business. 401ks. Again, when I was a sole proprietorship, I could have a IRA account, and I could put X amount of money into that IRA on a yearly basis. Now that I'm a corporation, I have a SEP plan set up for myself personally. So the corporation, instead of having income come to me, I put my income into my SEP plan so that it's completely tax deductible. Plus, the corporation then has to pay an extra percentage of what I put into that plan. So I can leverage the corporation to actually put more money into my SEP plan and be able to have the income go into a tax-deferred retirement account that becomes, again, a way for me to be able to move funds without having to be taxed on it, that I can use those funds at a later time in the future. And so I pay my taxes at that point in time when I take those funds out. Again, you can talk with your accountant, depending upon whether you're a sole proprietorship or whether you're a corporation, and how you can better structure your retirement program as your Synergy business grows and develops. If you're just getting started with Synergy Worldwide, this most likely doesn't make sense. But for some people who are making a large amount of commissions from Synergy Worldwide, then this type of aspect of a retirement account where they can move funds into their retirement account and leverage it to the maximum becomes attractive in helping to reduce their tax consequences. Now, going down here, what I did in this document is I highlighted the things that would most likely apply to most people. You're not collecting checks from people, so you're not going to have bad debt that you've got to collect on. But you might have some banking fees that are associated with the bank that you use, like PNC. They charge me $2 a month for me to maintain a checking account with them. It's $24 for the course of the year. I just write it off. It's a legitimate cost of doing business. I don't have any loans, so that doesn't apply. I don't have any collection expenses, but I might have credit card fees. Like I shared with you, I have a Capital One. I have a Chase Inc. charge card, and I have a MasterCard with American Airlines. Both of them charge me an annual fee. Now, I had my charge card with American Airlines prior. Well, now that I'm a business, I can take that annual fee and I can write that off now. So that charge card, whatever they charge me from an annual fee standpoint, because the rewards program that I get from them is worth paying their annual fee, again, it just becomes an expense. Cost of goods sold, again, if you're having Synergy Worldwide do all your product fulfillment, then this doesn't apply to you. But if you do carry some level of inventory with regards to products from Synergy Worldwide that you directly sell to your customers, then you want to keep track of your cost of goods. Your inventory, what you buy from Synergy Worldwide, if you order something from Synergy Worldwide, even your monthly auto ship comes with a invoice that's in there, a statement showing you, what you ordered, the date that you ordered it on, the amount, has the shipping fee on it. And if you live in an area that charges sales tax, because there's some places in the United States, it's all based upon zip code. Some zip codes have 0 sales tax. Other places, like in California, can have as much as over 10% sales tax. Well, again, that is all cost of goods sold. And again, you have that information that when it comes to you, if you're maintaining inventory, you have a documented receipt that can help you on a monthly basis, quarterly basis, every 6 months, be able to put together the information necessary to use this as a legitimate deduction. Again, I highly recommend that you don't get into any kind of loans to run your Synergy business. You want your Synergy business to run as a business. You don't have a building you have to maintain. You don't have payroll. You don't have employees. So really, there's no reason for you to get loans in this business. But you do have other expenses like office supplies. The things that you need to run your business. In fact, we're going to get to it in a little bit, but dedicate a space within your home, apartment, condo, wherever you're living for your Synergy business. Now, I have a home office. It's a 12 by 12. I'm going to come to this in a little bit. And this is my dedicated workspace. And so my computer that I bought from Best Buy sits on my work desk. And when I bought that computer from Best Buy, I wrote off the cost of that computer. I'm surrounded by shelves that I got from IKEA. I bought those IKEA shelves to be able to house, my inventory and other stuff for my Synergy business. Well, I wrote off those business shelves, those shelves that I bought from IKEA as a direct business write-off. So whatever you do, like, I've got a copier machine, I buy the toner for it, all those types of little expenses that you may have bought before you had your home-based business. Now that you have a home-based business, you can then legitimately begin to write these things off. If you mail something to someone, I don't know if David's on the line, but I know David does some snail mail promotions to his existing client base here in the Chicagoland area. The reason why you see the 55 cents highlighted in yellow is because the document that I pulled from had 48 cents for it. Well, it's not 48. You can't get a 48-cent stamp anymore. It's 55 cents for stamps. So again, if you do, let's say that he buys a roll of 100 stamps. That's $55 of postage that David's going to use on a snail mail campaign to be able to grow his Synergy business. You can now write that off. So again, anything that you do from a postage standpoint, if you're getting newspapers and magazine subscriptions, you know, you got to be careful on what you do here because it better apply to your business. So for example, one of the things that I try and do is I try and educate myself in the area of health in more than just in nitric oxide therapy. I want to be able to educate myself because I do a monthly newsletter. Okay, so MailChimp, I have an account with MailChimp. I get charged monthly by MailChimp to be able to push out my email newsletters. I do email newsletters to the people who are on the call here, to my Synergy organization. And then I also do a newsletter, a health newsletter on the 8th and the 22nd of every month that I use to stay in contact with my existing client base. And I want to be able to give them good information on my health newsletter that would be relevant to my clients to help them improve their health. Now, two things. MailChimp is a monthly cost that is a business expense that I can write off for using MailChimp to host. If I have a hosting company for a website that I might put up, a WordPress website, if you do a WordPress website, then you need to get a URL. You might buy that from GoDaddy. Well, if you buy that URL, the cost that you pay GoDaddy becomes a business expense. You need someone to be able to host for you. So if there's a hosting fee, sometimes it's a monthly fee, sometimes you buy an annual package, whatever the hosting company charges you to maintain that website that you're using to help promote your Synergy business becomes a write-off. And the reason why I'm bringing this up is I use information from two sources that has a $27 annual monthly subscription. So I write the $27 off on my taxes for both of those entities because the information that I get from them I use to help educate me and develop articles that I can then use to help educate my client base on ways that they can improve their health. So again, if you're getting subscriptions, just make sure that those subscriptions can be justified in helping you learn your business. Look, for example, if you decided to get the Wall Street Journal, as they talk about here, are you using the Wall Street Journal just to read for information, or are you using the Wall Street Journal to educate yourself on how you can be a better business person? So if you're using the Wall Street Journal for the second purpose, it becomes a legitimate write-off. Home office space. Now, there's a bunch of ways that you can do your home office space, but in preparing for today's presentation, I found this that I didn't know. In fact, I'm going to actually talk to my accountant about this, is that they have a simplified home office space calculation method. And I highlighted the simple method is best for smaller locations. All of us are in a smaller location. Back when I used to own several large health clubs, I wouldn't be able to do this. My deductions for my rent was much greater. But here in my home, this makes perfect sense. You can deduct $5 per square foot up to 300 square feet for a maximum of $1,500 per year. So my office is 12 by 12. That's 144 square feet. At $5, that's a $720 deduction for my home office. Now, that is a much simpler way and a greater deduction than if I try and do the following. If I take the 144 square feet divided by the overall square feet of my home and get a percentage, then I could take that percentage. Let's say it's 5%. Then I could take 5% of my homeowner's insurance. If I lived in a homeowners association that had a fee, I could take 5% of that fee. If I was using some type of janitorial service to clean my home, I could take 5% of that. If I had mortgage insurance on my mortgage, which is not a typical write-off. I could take 5% as a write-off. Mortgage interest here in the United States, you typically can write that off whether you have a business or not. Any repairs and maintenance, again, if I'm doing it to my business office space, I can take a full write-off. But if it's the rest of my home, I can't. But utilities, electric, internet, heat, hot water, gas, all those, I could take 5% of that. Well, again, there's a lot of extra work that you've got to do. In fact, I'm going to talk to my accountant about this because I just learned this in preparation for today's presentation. This simple method of just taking $5 per square foot. That would be nice to have an extra $720 deduction and legitimately do that on my tax to reduce my tax. Now, going down here, advertising costs. If I don't recommend this, but occasionally you'll get hit by the high school. Could you do an ad in our we're doing a musical. We'd like to have your ad in the program. Or it's the football boosters club and we're doing an ad. Would you like to contribute? I mean, if you want to do those types of community things, you can go ahead and do them. You're not going to really gain anything from increasing your business. But if you want to do that, then something that you can write off as an ad cost. We talked about hosting your website. I already talked about some of those things that you're doing. Advertising costs, like my MailChimp, is all part of my advertising methods to keep people engaged with me in my Synergy business. Let's say that I want to do Facebook ads. Again, I tried some Facebook ads last year, learned. Can't say that I really gained anything from them. But again, I could go and pay Udemy, to teach me how to be better at doing Facebook ads, then go and apply it. And if I was paying for Facebook ads, then those Facebook ads, the cost of it, I could then use as a legitimate business write-off. If you go to conventions and trade shows, and so Synergy just announced on Thursday night that they have a new promotion called Explore Chicago 2020. And we're going to take the last Saturday of this month and look at the qualifications for this promotion. And more importantly than look at the qualifications, give you a business strategy so that you can get the qualifications in place by the end of March so that you can then qualify to go to this event in Chicago for Synergy Worldwide. It's in July. Let's go to this here. It's July. What are the dates for it? It's July 9th through the 11th. Now, they're going to pay for most of your event, but they don't include airfare. Airfare is not included. So jumping back here, you would now, if you qualified to go to this event and you decided that you wanted to go to this event, you're going to have to pay for airfare. Now here in Chicago, I don't have to worry about paying for airfare, but I will have to go into downtown Chicago. I will have to pay parking in downtown Chicago, and that parking cost is a legitimate write-off. My miles into it will be legitimate. We'll come to that in just a second. But if I was flying into this event, that airfare is a write-off. If I had to rent a car, my rental of the car is a write-off. Additional expenses, if my hotel's covered by Synergy, but maybe I've got some meals at the hotel, 100% of those meals now are a write-off. So again, airfare and expenses that are associated with that trade show convention that you're going to become legitimate business deductions. Entertainment for customers and clients. Again, just be careful in this area. You certainly can do this, but you just got to be careful that you document it and make sure that you keep receipts. Because again, this is one area that becomes a red flag to the IRS if people abuse in this area. Gifts for customers, maybe you want to do a mug as a way to say thank you. Maybe you've got something that you want to do on as a way of helping you build client relationships. You've got people's birthdays, and on their birthday you want to do something. Maybe it's a $5 gift card that you send to them through, they're great customers or whatever. If you decide to do something, I didn't highlight it in yellow, but I know some people do gifts for their customers. Those become write-offs. Again, just understand that you're limited in the amount of deduction that you can do per person. Someone put something in the chat box. Let's see what it is. Okay, thanks, Bob. So let me go back up here. Oh, thank you. So Bob pointed out airfare and expenses are not, again, they are. So I got to take the not out. Now, thanks, Bob, for pointing that out. I'll change it in my, I'll update this PDF so that that correction's taken care of. Thanks for your observant eyes. Now, professional fees. If you get charged by your accountant, he's going to pay for you. You got to pay for his services. Now, the way that you lower the cost of your accountant is make sure that the information that you provide to them is as easy as possible for your accountant to use. I don't take all my receipts of my business and say, oh, here's my receipts. They're in folders by month. Will you organize it, Mr. Accountant? If I did that, he would do it. He'd have his secretary do it, and he would charge me. What I do is I give him a piece of, a piece of paper, 3 pages long, and it has the total income, all the categories where that income is generated, the total expenses, all the categories of the expenses, and then all he has to do is plug those figures in and then do the accounting that needs. So I limit the amount of work that he has to do because I give him the information that he needs, and I don't have to pay for him to do that process of getting the information together. I do that, and then he just uses his accounting expertise to help me get the best in deductions as possible. So whatever I pay him, it's a business write-off. I don't have any consulting fees. We'll take that back. I have worked with some people who told me that they could help me improve my marketing strategies, and I paid some money to help them do that. And I can tell you from my experience that in most cases, this stuff never works. So I don't do this anymore. But in the beginning, when I started my Synergy business, yes, I paid some people to help me better market myself. But again, I found that their work didn't improve my ability to market my Synergy business. And so it was a waste of time, waste of money. The only thing that was the advantage is what I paid them, I was able to write off. Legal fees, again, if you don't get yourself into trouble, you don't need to worry about this. Don't use subcontractors. Travel, airline tickets we talked about, hotel and lodging we talked about, meals while traveling. I guess it's 50% of the bill. So I told you 100%. Again, the correction is 50% of the meals that you incur while you're traveling, you can then write them off. If you have to get a rental car here in Chicago, if you come to the event, like when I travel to Utah, I have to, in some cases, get a rental car. Other cases, I'm fortunate that Dane will pick me up at the airport and he'll take me around to different places. But sometimes I don't want to burden Dane with that, so I'll just get myself a rental car, and then it becomes a legitimate write-off. Now, auto costs, you can keep track of this. The easiest thing to do is just do your mileage. All right. Now, again, the amount that they had in here on this document, it's now up to 58 cents per mile. So what I do is I have a yearly planner. That yearly planner, when I open it up, the 2 pages represent 7 days, gives me all my time slots for those 7 days. And then on my planner, if I go someplace that's business related, like if I have to go to the post office to mail something, I know that from my home to the post office and back, round trip is 4.5 miles. So I just write on my planner, post office, the time that I went, and I write underneath that 4.5 miles. Let's say that I'm going to go into downtown Chicago for the Synergy event. I'm approximately 28 miles straight west of downtown Chicago. So if I had to go to downtown Chicago for the event, and then if I win a hotel stay, then it would be nice that my wife would go with me, and we would stay and take advantage of the hotel that Synergy is going to provide. And then once the event's over, 28 miles to come back, that's 56 miles that I would then deduct as mileage for that event. But if I had my car downtown, I'd have to pay for parking downtown. Now, most likely what I would do is, instead of taking my car, I would just hop on the Metro. And I would take the Metro downtown Chicago, and then most likely, if I got a cab to go to wherever the hotel was, that cost for riding the train, the cost for the cab, those are all legitimate business deductions. So again, just keep good records. And they talk about keeping a log in your car. I don't do that. I just have my planner, and I just write on my planner what it was and what the mileage was. And then I just add it up at the end of the year. And the total number of miles times 58 cents per mile is my tax deduction. And then in addition to that, if I have parking fees and tolls that I have to pay, because I live in Illinois, if you go on the toll road, you got to pay a toll. Illinois doesn't let you travel their roads for free. So, it just becomes a business deduction. And then the last thing is, I've got some additional links here for other good resources that will help you in this area of looking through them, that might perk your interest or jog your aspect of how you run your business to say, okay, I bet you I could take that as a legitimate deduction. Let me talk to my accountant to see if that would be possible. Now, with that said, do I have any questions from anyone that's on today's call that would like to ask me anything that I've shared, or questions that you might have?
Dan,
Yes, Timothy.
here. That was very thorough. The only difference that I can get on this, that I get back my VAT. When I collect VAT for government, they pay me, I don't pay VAT on things that I buy. So my gas becomes VAT free. My travel becomes VAT free once I am collecting VAT for government. So
Sure.
I have an advantage upon that, but all those things you mentioned are possibles here also.
Great. And we don't have value added tax here in the United States. So, again, that's why there's some things that you'll have to, hopefully what I've shared with you are some things that might help you, to an even greater extent, take advantage of the tax laws in Barbados.
All the things that you mentioned are possibles, but is that I have an advantage that when I bring in products, I pay VAT and I get my VAT back.
Great.
The other guys may not, but I get my VAT back. So it is an advantage over, because I'm a VAT collector for government. But let me say again, all the things that you mentioned are possibles here in Barbados.
Excellent. Great. Thank you, Timothy. Thanks, Bob, for your comment. Glad it was helpful. Anyone else with any questions or comments for me before we say goodbye?
Hey, Dan, it's Judy.
Yes, Judy.
So if I could share just a couple of things that may help all this with time saving, because I know when I first started doing all the taxes, it was overwhelming, and I spent hours and hours throughout the year, and especially at the end of the year, trying to get all this, adding all the numbers and doing all the categories. So there is some computer programs for your checking account. So you can use Quicken or QuickBooks or Microsoft Money, and in there, every time you write a check or get a check, you can categorize what that expense or income was for, and then at the end of the year, it's all done for you. You can just run a report, and that's what I do with my tax accountants. I just run him a report saying, you know, this is my phone charges, this is my mileage, this is my advertising, and it's all done and categorized and added up for the accountant. So it saves a whole lot of time.
Yeah.
Judy, this is Bob. I've been using Quicken for years, and that's exactly what I do. I just print off the report at the end of the year.
It works so nice. And then I use something else for my mileage. So it's tied to my phone, and I don't get into my car without my phone, and it automatically records every time I get in the car. And you at the end of the trip, then I put in the purpose of the trip and who I was visiting. And it's not always business, sometimes it's personal. But again, at the end of the month, or the end of the quarter or the end of the year, however I choose, I just write a report, and it prints out all my personal miles and all my business miles, all my volunteer miles. All that is categorized. So when I give it to my accountant, he knows what percentage was with personal and what percentage was with business and volunteer and all the other categories that I use. So it's done automatically for me because, you know, Dan, you are extremely good at details. I'm not one that is so consistent with that. So having this done automatically for me really helps, because sometimes I have to go back and look at all my trips and go, oh, that was a business trip, this was a personal trip, and I have to go back and categorize some of it, but it's all there, so I don't have to remember. And I used to have to go back to my planner and do it, and I don't have to do that anymore.
A couple of things to what you said, Judy, and if you got more to share, but I want to make sure I don't forget these things. First off, I didn't talk about your cell phone. You know, before I had my Synergy business, my cell phone was an expense. Now that I have my Synergy business, what I did is I separated my phone from my family plan. And so it wasn't that much more cost to do that, but now my phone, my month, what I get charged, I'm with Sprint, so what I get charged on a monthly basis by Sprint becomes a complete 100% write-off because I separated my phone from my family plan. And then one of the things that you talked about from a mileage standpoint that I didn't talk about here, but you refreshed me, you actually can take the miles that you put in for charitable work, and you can deduct those miles. I don't remember what the cost is, you know, what you get on a cents per mile basis, but that's another way for you to offset your taxes. So that's
absolutely, and also medical. So every time you go to the doctor, I think this year it's 17 cents a mile. So I'm talking to my tax accountant. I had to go to the doctor in Denver, Colorado. Mm-hmm. And I live in Chicago. So I'm gonna see if I can deduct those miles.
Yeah, that would be cool because you have a lot of miles that you have to drive. So,
yes, once
so,
a month for 9 months.
Yeah, so 17 cents on all those miles adds up to be quite a bit that you could use as a legitimate tax deduction. So one of the things that you're saying to us is there are apps and programs that are out there that can make it easier for you to categorize and put the information in. No matter what you use, the key is just be disciplined to do this. Because if you do the discipline aspect on a daily, weekly basis, it just makes it so much easier at the end of the year to have all your information. Plus, if you did ever get audited, the more that you're able to document what you do, the better that people who are auditing you see that, yes, this person is taking this stuff seriously and has put in place ways that they are able to justify what they're using from a tax write-off standpoint.
That's so
That-
true. And I heard a figure, and I don't know how true it is. I heard this years ago, that the average person can deduct $6,000 in expenses just by doing the things that we're doing anyway in our business.
Mhm.
And to take $6,000 off of that tax liability is huge.
Well, just for example, my cell phone, that's $900. That before, as a family plan, I couldn't have taken, but because I took myself off the family plan, and it still was Sprint, and they gave me a great deal because the family plan was there, so they, you know, gave me a great, that's $900 that I would not have been able to write off if I was not having a home-based business. So yeah, I can easily see how that could all add up. You know, you go to my office, you know, because I'm gonna talk to my accountant about this. You know, this easy is this, because I've never really taken it, because you know the 5 here, yeah. So
Right.
get to the right, there it is. So you know, there's $720 deduction from my home office because my square footage is 12 by 12 here in my office.
Yeah, and that's just been in effect for the last 2 years.
Yeah.
They just changed that. So makes it a lot easier than doing all the electrical and gas and water
Yep.
bills.
Yeah. Anyone else with any questions or comments before we say goodbye?
Dan, just want to come back in for a second. The office space got to be distinct from your house. You got to set apart a room that is distinct.
Yeah.
That's
Yeah,
one. And two, I've got QuickBooks, and that eases the situation up. I agree with Jody on the QuickBook. Only difference is that I got to see my accountant every 2 months because the VAT is due every 2 months. So I got to send in a report
Sure.
every 2 months. So that becomes a little more expensive to me than having done at the end of the year.
Yeah.
But the benefits outweigh that disadvantage. But I agree, QuickBooks, learn it, and it's the best. It's one of the best things to help you keep yourself on track.
Good. Thank you. Any final thoughts before we say goodbye? All right. I want to thank you for your time today. We have recorded today's presentation. It will go out on Tuesday. It'll go up on our YouTube channel on Monday. And in the newsletter we sent out through MailChimp, that on my monthly field for MailChimp is a legitimate business deduction. You'll get it on Tuesday, and again, you can share this with other people in your Synergy business. Thank you, everyone. Have a blessed Saturday. We'll talk to you next Saturday when Bob and Judy do another one of their fantastic leadership development webinars, and using, again, material from Les Brown's book.